The home buying process is a lot longer, more involved, and convoluted than many believe when they embark on this journey. And it can take as little as 19 days or 6 months, depending on where you're at in your journey and when you want to be in this new home. In today's video, we're going to run through the entire process from start to keys in hand. And if you have any questions on any particular portion of the home buying process, please reach out to me. We will schedule a phone consult. We'll talk through whatever questions that you have, any scenarios that you are worried about, and make sure that you are prepared to purchase a home. So, any home buying journey should begin with a mortgage application. Okay, now I know it's not as sexy as touring homes or going to open houses or scrolling Zillow when you're laying in bed at night, but the mortgage application is where this thing gets real. And why it is so important is because this is how you're going to find out if A, you can even qualify for a mortgage loan, and B, if so, what are the terms? Right? Can you get qualified for how much you're looking to spend? What is your ceiling? What are the left and right limits on the approval? Are you going to have to pay anything off to get approved? Like, this is what you find out when you do your application. And again, it should be the very first step. And I always advise that because the very worst thing that a home buyer can do is they start getting emotionally attached to a certain kind of house or a certain price point. And then they go and do the application and find out that they can't qualify for that. In fact, they can qualify for about $100,000 less, which is a completely different kind of home. So now you're starting your journey with what seems to you like a defeat. But if you had just knocked out the application first, you would have known right off the bat where you should be shopping, what price point, what that monthly payment would probably look like at that price point. And this is the other important portion of the application that comes just after qualification. Now, every lender is a little bit different, but here's how Mike Lindsay does it, is that once you are qualified, then we move into pricing out homes, because the online calculators, they lie. Don't use them. Have me do these estimates for you. And it's not going to be fluff. I'm not going to shortchange any numbers to try to make it look better like a lot of other lenders will do. But this is going to be your first snapshot of the true cost of getting into this home, not just the monthly payment and the interest rate, but the closing cost as well, because I'm going to give them to you fully itemized, and I'm prepared to explain why it is that you are prepaying 15 months of homeowners insurance, why you're prepaying 6 months of property taxes. What the heck is title insurance? Why am I prepaying mortgage interest? What's an appraisal for? Okay, this is your opportunity to ask those questions and get educated and learn about how we get to these numbers. And believe it or not, some of these numbers can be manipulated into your favor. So, in summary, always, always, always start with the mortgage application. So while I do mortgages at this point, usually about 20 to 25 a month, before that, I actually did real estate as a real estate agent. I was part of over 150 transactions, which is probably more transactions than your average real estate agent out there. So I have an unusual amount of experience and expertise with that side of the house as well. So as we go through this step-by-step guide to buying a home, I'm gonna hit all of the things on the real estate side of the transaction as well. Once we've got the mortgage application complete, we've priced out a few homes in a few different price brackets where we think we might wanna be. Now it is time to go physically or virtually home shopping. So this is where you go on home tours with your agent. You go to open houses, you scroll Zillow. These days, a lot of agents will do like these 3D virtual tours where you can, digitally tour the home as if you were actually there. And this is fun, okay? Look, I'll admit, I've bought multiple homes myself. I get it, like this part is fun. It's fun seeing new and different houses. It's fun seeing how people set up their houses. But remember, you're using the data from your application to dictate what homes you're looking at. Because if your max approval is 350, you're gonna waste your time, your agent's time, looking at 400, 450? I hope not. But in this stage, you really wanna keep in mind why it was you were looking to purchase a home to begin with.
what it was that was most important for you. And I mention that because a lot of folks will fall in love with a home. They'll become enamored with the view, or maybe a layout, or maybe some other attribute that was not at the top of their list when they started their journey. So just keep in mind your top 3-5 reasons for purchasing this home. Now, you look at a bunch of homes, you talk amongst yourselves, and you have found one that you feel strongly enough to offer on. Now, you're not just going to go have your agent write the contract. Even though you're going to be very excited, you're going to be anxious, like all these emotions, the first thing you do is you take that address and you give it to your lender. The lender, again, if they know what they're doing, they will do a fully itemized cost estimate using what closing date you want, the property taxes for that home, the estimated homeowner's insurance for that home, so it can be as accurate as possible up front. Okay, if your lender's not doing this for you, please reach out to me. I will run an estimate for you even if you don't even have an application with me, because I would rather you seal the numbers in real time than getting yourself under contract blind. But you do get the numbers in front of you, right? You look them over. Yep, payment is kind of where I want it. Closing costs are doable. I see my earnest money reflected. It's all good. Now you can offer on that home. And what that looks like is your agent is responsible for putting together the contract to buy. They'll handle all of that. Your input is in the terms, okay? So, how much are you going to offer? Are you going to ask for seller concessions? How much will the earnest money be, or the due diligence money? What's the closing date? Are you going to have any other additional provisions in there? What about all the dates and deadlines that will potentially allow you to get out of the contract if necessary? This is a conversation between you and your agent. Now, if you're working with a good agent, they will have solid recommendations for all of this, but your input will be required because it has to fit your needs, your timeline, all of that as well. So you come to an agreement on the terms you asked for. You're going to sign this contract digitally, virtually everything nowadays up until the end is a DocuSign type of format. And then the contract is sent out to the sellers for review. And usually your agent will give them a deadline, 24, 48, 72 hours, all depending on, how hot the market is at that time. So the seller is going to do one of a few things, right? So they could either accept right away, which is the optimal course. They could counteroffer some of the terms, whether it's the purchase price or the concessions or the closing date or what stays with the house, whatever. There's a lot of different things they could counter. Or I suppose they could just ignore it altogether and accept another offer if they did have multiple offers. So this sort of mushy middle between you submitting your offer and you getting a definite response is typically one of the most stressful times because you just don't know. A lot of things hang in the balance. You're excited. You probably got some level of emotional attachment to that home. You really hope it works out. Maybe this is the first time you've ever done this, so you don't really know how it plays out. But, best advice I can give is first off, try to relax. In real estate, things tend to happen the way they're supposed to. But also, maybe just keep your eye open for other homes and other possibilities, because if you do lose out or you cannot just come to terms with that seller, you're going to have to move on. And depending on your timeline, you may have to move on fairly quickly. All right, so always have another option in your back pocket. But in this scenario, because your offer was strong and the estimate that Mike Lindsay provided you gave all the clarity on the numbers, you are going under contract. Okay, now, under contract means that there is a legally binding contract to purchase that home, right? You and the sellers have agreed on all the terms. There is a closing date, there is a specific purchase price, all the terms are there. Now, a lot of things are going to happen at once. And this is why it's so crucial that you have a strong team, meaning a strong agent and a strong lender, because you're going to have responsibilities on both sides of that aisle. And a strong agent can do a lot of heavy lifting and a strong lender can do a lot of heavy lifting. But let's just talk about what's going to be expected of you. Now, right after you go under contract, you're going to have 3 big responsibilities that are going to happen probably within the first 48 to 72 hours. So number one, you've got to submit your earnest money, or in some states, your due diligence money. Now, this is your good faith money. It is submitted, not really to the seller, but to the settlement agency, where they're going to hold it in escrow for the duration of that transaction. Now, why do you do this? Well, it's skin in the game. It shows sellers that you're serious and that you have the financial wherewithal to purchase that property. Now, when the transaction closes, that money comes back to you in the form of a credit. Now, if the contract terminates early, if you're dealing with earnest money, most likely, unless you did something really dumb, that money is going to come back to you as well. If you're one of the states that's operating with due diligence money, that is a whole different conversation. And if you are dealing with anything other than earnest money, there's due diligence, there's like time off market. Have a conversation with your agent about what that means, because the rules are significantly different than it is with earnest money. So earnest money will be wired, or you can drop off a cashier's check to the settlement agency. That's responsibility number one. Responsibility number two, you will schedule a home inspection. Now, that inspector is going to get in there and do a diagnostic examination of your home from foundation to roof, everything in between, issue a probably 70 or 80 page report. You're going to learn a lot of really, really great information about that home, the condition of all the major end items, permit information, all that. Okay. Also, this can initiate a window of time during which you can negotiate with the seller to have things repaired prior to closing, prior to you taking occupancy. So very, very important step. Even if you've agreed to purchase the home as is, right? Still get a home inspection, because you could find out about a lot of things. A lot of potentially catastrophic issues can come to light through the home inspection. So always get that done. Try to schedule it as soon as possible, just because if there's something in there that is going to cause issues, you'd rather find out about it sooner rather than later. So that's responsibility number two. Number three is that on the loan side, we're going to issue your initial disclosures. Now, this is a whopper of a packet as well, comes in email in a DocuSign format, and most of it is going to be federally mandated home buyer disclosures. But smack dab in the middle is going to be your initial loan estimate. It's 3 pages in the government's required format. It should be, if your lender has been doing the right things, it should be basically the exact same numbers that you saw on their cost estimates, just in a different format. If you get that initial loan estimate once you're under contract and your numbers change drastically, that's a red flag. And you need to reach out to me. You need to send me that loan estimate, and I'll tell you exactly what they're doing, if they're cheating you, if you fell victim to the bait and switch. Please reach out to me if you have any questions on numbers that you get from another lender. It's a very challenging market. A lot of shady BS going on out there. I do not want you to fall victim to that. So those are your 3 big responsibilities right after you go under contract: earnest money, home inspection, and initial disclosures. So as I said, once the home inspection is complete, there's a window, usually roughly around a week, that you can negotiate with sellers to have things repaired. Right now, okay, which is June 2025, the vast majority of terminations that I see are based on home inspection. And the reason is that interest rates are high, homes are not cheap, buyers have a lot to choose from. If there's anything wrong in that inspection, they're just terminating on the spot. And I'm not saying that's right or wrong. There's been some instances where I was like, yeah, you definitely should have done that. There were instances where I was like, man, you really jumped the gun there, because that's not even that serious of a problem. So, this is where you'll really work hand in hand with your agent, who's hopefully experienced in these matters, and they can educate you on what can and can't be fixed, what's wear and tear, and what's legitimately like a catastrophic issue. So as you're working through that whole repairs piece on the loan side, now that you've signed your initial disclosures, we are going to be building out your file for processing and final underwriting. So during this stage, we're really wanting you to monitor your email, okay? Because as processors, underwriters, even the title company or settlement agencies asking you for documents, information, what have you, they're going to be reaching out via email, okay? You really have to monitor that. That's how you stay ahead of all these major milestones. And as we approach closing, we're not chasing documents or information or anything like that. It's a nice stress-free experience. Also during this time, once, and the way I do it anyways, once it looks like everything's okay with the home inspection, you give me the thumbs up, I will go ahead and order the appraisal. Nothing really you need to do there other than wait for it to come back. And every state's a little bit different on how long it's taken. Appraisers are one of those entities that no matter how hard we try, we can have zero control over, and the more we push, the slower they work, it seems. So ultimately, they do have to have it back, or they're supposed to have it back within a certain amount of time. And then once it comes back and it's reviewed and approved by an underwriter, you will receive a physical copy in your email because it does belong to you. And it's got a lot of great information about your home, metric-based comparisons to other similar homes that have typically sold within the last 60 days. If you don't even care about that, the value will be right there on page 3. And just to reiterate, why is the appraisal so important is because, for one, it's making sure that you are not overpaying for that home. And two, the lender can only give you what the appraiser says that home is worth. So if you're under contract for $300, appraiser says it's worth $295, ooh, we got a little bit of an issue there. Okay, but that's subject matter for another video. So as we're working through the appraisal, we're going to issue a few more disclosures along the way. Why do we do that? Well, because numbers begin to come into focus. Maybe you lock your interest rate. You're going to go out and choose your own homeowner's insurance, and we'll substitute those numbers for what we have in the estimate. Maybe there was a recalculation on the property taxes, what have you. But once the appraisal comes back and is approved, and assuming we've achieved all our other milestones along the way, we will achieve what is called clear to close. That means the loan's good, like we're ready to finish and complete this transaction. And once we do that, you'll receive your closing disclosure, which is the same format as that initial estimate, but should have all the numbers about 99% locked in. And the reason, and from the date that you receive that and sign it, there is a mandatory 3 business day waiting period before you can actually physically sign for the home. And that's just so, it's a consumer protection device so that the numbers, you have an opportunity to kind of season and think about it. And when you show up to physically sign for your home, none of the numbers in regards to the loan should be a surprise. If your lender was doing what they were supposed to do, you should have seen it by that point 2-3 times, hopped on the phone to talk through it if you had any questions, okay? Now, hopping back to the real estate side, especially once we achieve clear to close, your agent will work with the settlement agency to establish a closing time. That's your appointment to go sign the final documents and become a homeowner. And this can work in a lot of different ways. The traditional way is that you physically go to the settlement agency, whether it's a title company or attorney's office, whatever, and you sit there with a closer and you sign all the documents, probably signing your name 50, 60 times. It's kind of an arduous journey. And that's the traditional way. But, in these modern times, especially in the military demographic, that's not always possible. So there's a few other options too. Okay, one being that, it can be arranged for a mobile notary to come to you wherever you are. They can come to your house, they can meet you at a Starbucks, whatever, and you'll sign the documents with them, and then they will overnight it back to the settlement agency. You can also have a family member or even a friend sign for you via power of attorney. And this is relatively new, and I don't think all lenders even do this yet, but in certain scenarios, we can do what's called a remote online notary, where you log into what is essentially a secured Zoom chat room, and the closer's on the other side, and you go through the documents just like you were there in person, and you sign everything, and everything's all good. But however that's done, once all the closing documents are signed properly, and it's been verified that your cash to close, if you had any, has been received by the title company, then they will disperse funds in all directions, right? So they will, pay the seller's old lien, they'll, send like concessions or cash back in any direction, net proceeds to the seller, whatever. So they disperse all funds, and they ensure that the transaction records with the county and the state, and then you are a homeowner. okay? So that's the journey. I rambled for about 20 minutes, but and every transaction is going to play out a little bit different, but these are the high points, the milestones of essentially every home buying process, all right? If you have questions about any of this, please reach out. Again, we can set up a consult. We can talk through any stage of this process. Once again, before I did loans, I also did real estate. I was probably a part of 150 some odd transactions. And so I know actually quite a bit more about that than your average lender, and more than willing to share, my knowledge and experiences with you. So that's the home buying process, step-by-step guide for 2025. If you liked this video and you'd like to check out my other content, please click on the link right there.